So welcome back to another edition of our monthly video newsletter. As you recall from the last video, we discussed the acquisition process and the various steps and team members that are involved in successfully closing on a commercial multifamily property. So let's say that you close on that property. Now, does the work stop there? You simply just pack it up, go on vacation, and just hand over the keys and your business plan to the property manager? Well, the simple answer is no. The work starts right as you close on the property. In fact, you need to really start digging your heels in with your business plan and working with your property manager to make sure that everything starts off on a good footing. So what is an asset manager? We get asked this quite a bit. The asset manager basically is managing the business plan. We are in charge of making sure that the property is performing according to the plan that we set out during the due diligence process. Another question that really gets asked quite a bit of us is, what is the difference between an asset manager and a property manager? They both have management in it, right? So they should be the same. Well, no. The property manager, you can think of, they're the workhorse of your property. We like to say they're the oarsmen of the ship. They are helping provide the power. They're completing the day-to-day operations of that asset. Some of the things that property managers do are things like work orders, repairs and fixes that are needed in each of the apartments that tenants put in. They're in charge of vendor communications. They're in charge of basically orchestrating the coordination between your landscaper, between your garbage disposal people, every vendor that makes the property pretty much operate on a day-to-day basis. They're also in charge of providing reporting to us as the sponsors, and reporting is very important. Mark would jump into a little bit deeper. Basically, it provides us a day-to-day high-level view of how the property is operating. And for us, two of the most important things that a property manager does is leasing of the vacant units and also rent collections. Very important there. So as you can see, their efforts really help move the ship forward on a day-to-day basis. So us as the asset managers, we are helping and making sure that that ship is going in the right direction, that it's being steered in the direction that we've anticipated, and it's part of our business plan during the due diligence process. We as asset managers are helping to guide the property manager to accomplish the business plan that we set out. And we will dive a little deeper into exactly what that means as us as the sponsors helping the manager or helping manage the manager. Mark, take it from there.
Absolutely. But first, before we get into how we guide and manage the manager, we're going to discuss when the timing of asset management begins. When does it begin? The answer might surprise you. It begins even before you take over the property, really during due diligence, when you're assembling the team and a plan to be able to execute on day one of your takeover of the property. Your due diligence and the information that you learn during due diligence and prior to close, it really shapes how you approach the project. You assemble the team before it closes and ensure that your team is ready and prepared to execute on day one. And that's really where the rubber meets the road. What does that actually look like, though? Asset management on a day-to-day basis. Well, similar to due diligence, we at Maple Capital Partners, we divide asset management into two buckets. One of them being financial asset management and the other being physical asset management. On the financial side, it really comes down to KPIs or key performance indicators. These are metrics that you use on a weekly basis or sometimes daily basis to be able to track that your asset is performing according to business plan. Some of these KPIs that we like to track include things like occupancy, your average rental rate, P&L metrics, other income line items, utility costs, the time that it takes you to turn units, the time that it takes to lease units, CapEx budget, and how that compares to your scope of completion. Really, all of these go into how you're managing the asset. You're looking at trends and not just basic numbers for these metrics. You're trying to make sure that the trends are going in your favor. That is, the numbers are headed in the right direction. And that's an indicator that you're doing the right thing. If any of these numbers are headed in the right direction, that should be an indicator to you that you have to go back to the property manager and correct course. The other side of asset management is the physical aspect. That includes the renovation. Really, you're managing the scope, the budget, and sometimes even managing the project itself. You could be hiring a GC for this role, but realistically, you should always have somebody on your team that's comfortable with construction and CapEx that they can oversee the GC or perhaps even step in as a GC themselves and oversee some of the subs as they get some of the CapEx done on your units. Also, there's a value add aspect to physical asset management. Those include things like instituting amenities and packages that improve your tenants' lives. That could be things like washer dryers that you're leasing to tenants. It could be things like your cable and internet package that you're offering to your tenants. It could be partnerships that you have with nearby businesses where maybe you offer a discounted gym membership to all of your tenants if you don't have an on-site gym. So it's really anything that you're instituting that's adding value to the tenants' lives. With that, Gonzalo is now going to talk about planning and executing your asset management.
Mark, getting me fired up with all those value add strategies there. Very exciting. The next one we'll talk about is planning versus executing as an asset manager. Now, it's great that your plan is always on paper. Everything looks perfect there in the beginning, right? This is the plan that you're set out that you want to hit. Now, the real issue is, can you actually execute on that plan that you set out before closing? Now, how we would love to sit here and kind of say, yes, there's never issues that pop up. The plan always goes according to plan. You speak to a lot of people who've been in this business for a while. The answer simply is no. Things always pop up. Obstacles always arise. But it's really how you manage those issues and how you pivot along the way. So us as asset managers, we need to pivot when things come up. So I'm going to be discussing just one example, one very simple example of something that may come up and some ways of you dealing with those issues. So let's say in the beginning of your planning phase, you have a 1-year timeline for your value add business plan. So essentially, you have a 12-month period of making the renovations that you need of your units in order to meet that business plan. However, you find out that during a couple of months in, your vendor is not really performing to the schedule. You need to make sure that you identify this very early on in order for you to pivot. So this is where KPIs come in. Mark mentioned earlier, you need to look at trends. You need to see, is the contractor falling behind? And you need to make a decision if you need to either scale back your renovations to give your contractor more time to renovate the units and meet that 1-year deadline. Do you go out and maybe find a different contractor, find somebody else that maybe is not as busy as the guy or girl that you're currently using and switch to them? Or do you simply just put your renovations on hold for a short period while your vendor is maybe catching up on some of the renovated units? These are just a couple of things that, one example and some remedies to the example that you may encounter as you start doing your value add improvements. Now, there's going to be other issues, other obstacles. So you as the asset manager, as mentioned before, it's very important to identify these issues early on before it gets to be an issue or a problem. And you need to pivot accordingly and put a set of action plans in place to help you meet and be successful on your business plan. I'll hand it over to Mark for the final.
Thanks, Gonzalo. At the end of the day, we as the GPs, the sponsors, the buck stops with us. We are the captains of the ship. If you will, imagine with me raising millions of dollars. You've done your due diligence on a deal. You've secured financing. You've closed on a deal. And now you throw your hands up in the air and you head on vacation and you pack it in. You say, the property manager's got it from here. You know, our job is done. That is absolutely a recipe for disaster. And we hope that if we've brought any concepts home during this video, it's the idea that asset management is absolutely vital to how a property performs. And it's really incumbent on us that we manage a property accordingly once we take over. Now, asset management requires a very unique skill set, and it's vital that you have a member on your team who has that skill set. Also, Gonzalo mentioned, you know, it's really important for your team to be adaptable. Things come up and these deals are always fluid. It's important that you're able to adapt your business plan to opportunities and issues that pop up along the way. After all, we are captains of this ship. We have the privilege of investors entrusting us with millions of dollars, potentially, of their hard-earned money. And the hard work really begins on managing that expectation once we close and begin to take over the property. So with that, we'll sign off the way that we always do at Maple Capital Partners. Be kind, be charitable, and invest wisely. Thanks, folks.